Okay, in this video, we'll be talking about how you can trade these two specific reversal pattern in a range bound market, in the middle, in the beginning, and at the end of that range bound market. Because you can see this is obviously a reversal pattern in the end of a trend and a continuation pattern at the middle of the trend or anywhere. They mean different things depending on where they are. So in this video, I'm going to be showing you how they behave at each and every part of the range band market. You understand? So we are going to start with this pattern here. So this is a hammer candlestick pattern. Obviously, you can see it's at the end of a downtrend. So at the end of the downtrend, you also have the beginning of an uptrend. So this is the beginning. At the beginning of the trend, you see a hammer candlestick. Most of us at the beginning of the trend, when we see this hammer candlestick, we tend to, like, this is the closing price, we tend to buy immediately. But when you buy immediately, you are doing the right thing. Yes, it's right that you buy. But for 1 minute expiration, you have to understand how the market moves, because the market moves from swing to swing. So if this is a swing and it went up to make this new high, it will have to swing down before it goes up. This is how the market moves, because this has been a downtrend. It has been a downtrend, and you get this reversal. So the pressure from this downtrend, the previous downtrend, that if you can imagine a downward trend from here, the pressure from the previous downtrend will still be lingering about. So it's going to bring a downward direction. This is why I put this small red candle, and then you can see this big green candle, which shows that ultimately the price is going to go up. So when the price is here, you have to wait for at least one candle or a weak candle to come down and then goes up. If the market volatility is strong, is strong, then you don't even need this candlestick. You just need a red candlestick that comes down and a big rejection takes it up, and then you can do a call trade. This is how it is at the beginning of the trend. Now, at the middle of the trend, at the beginning of the trend, you can imagine, if you are using your indicators, you can imagine that there is a 2 deviation lower Bollinger Band here. And this 2 deviation lower Bollinger Band may be acting as support and resistance, whatever the case may be. There may be a round number, there may be any kind of level which will add to your trading accuracy or to your profitability. Now, at the middle of the trend, I call it the no man's land. At the middle of the trend in a range bound market, it belongs to nobody. There is no buying or selling pressure there, because at the beginning of the trend, we can see obviously there is buying pressure, and at the end there is selling pressure. But at the middle, we don't know what's going to happen, if it's selling or buying pressure. So if you see this kind of candle, which is a hammer at this point, is a continuation candlestick, and the candlestick start by going up straight, then you should know that you should not go with this candle, because if it goes up at the end, it will definitely come down. So at the middle of the trend, I tend to avoid trading any continuation or reversal pattern in a range bound market, or if it's in a trending market, which we'll be looking at in our next video. If it's in a trending market, then I can decide on what to do. But in a range bound market like this, you have to wait to see the next candlestick. The next candlestick will determine if it's a ranging or a trending market. So this is how you trade it for the middle. And at the end of the trend is the same thing. Now, at the end of the trend, like I said, this is a hammer, but at the end of the trend, this becomes a hanging man. Why? Because you can imagine from here, you can see that there is a loss in, you can imagine a loss in momentum in this uptrend, and after the loss in momentum, you can now see that this hammer, this hanging man shows. Now this wick, because there is a loss in momentum, this wick here automatically shows selling pressure, because there is a gain in momentum. This wick here at the beginning shows buying pressure, but this wick now is showing selling pressure. Now the length of the wick determines the strength of the upcoming reversal. So since this wick is long, the market might want to go up, and those people who think that this is a hammer might have bought, but when it's going up, you find out that you get a rejection and boom, it comes down. This is how it is for the hammer candlestick pattern. And the opposite is the same for a downtrend. Remember, this is a range bound market. This is a range bound market. So in a downtrend, this is the beginning of the downtrend. So this wick here automatically is showing what? Selling pressure. But even if it's showing selling pressure, this previous uptrend will still be lingering about, so therefore the buyers can want to push price up again, but ultimately you can go with your call, with your put trade. Now if you are not sure about this thing, this is why there is higher expiration, because at the end of the day we'll find out that the price in a case like this will go down more percentage, more often than going up. So you can go for 4 minutes, 5 minutes put trade. The same thing for here, you can go for 4 minutes, 5 minutes call trade. And also here, you can go for 4 minutes, 5 minutes put trade. So this candlestick, I need you to understand that this is not a hammer. Please take note, this is a hanging man. So now you have this. Let's go back. You have this, a shooting star. When you see a shooting star at the beginning of a trend, which the beginning of a downtrend is in a ranging market, is always the end of an uptrend. When you see this like this, you should know ultimately the price will be going down for the next few minutes. So you can do your put trade for 3 to 4 minutes. If you don't want to do that, you wait a bit to see a reaction from this price, and then sometimes you get something like this. You can see that when you get a hammer candlestick, a shooting star candlestick, or a hammer candlestick like this is always going to be a key level, the middle here, you see. So when price comes to this middle and you get a rejection, you can trade. When price comes to somewhere, let's say here, let's say when price comes back to this wick here, you see here, yes, when price comes to this wick here, you can trade. So when you see the hammer, you can wait for maybe one candlestick to close here or 2 candlesticks to close here. Ultimately, this whole place here is showing selling pressure, and all you need is to wait to see any sign of selling and pressure from the next candlestick, and then you go with your trade. Now at the middle of the trend, the same thing holds, but for downtrend it is different from an uptrend. Why? Because for downtrend, the motivation for going down is different from the motivation of going up in the case of an uptrend. Now, it is greed that drives price up, and it is fear that drives price down. Now, fear is a much stronger emotion than greed. So when you see this candle in a downtrend, it may tend to go up, but it most often comes down. So when you see this candle in a downtrend, what in the middle of a ranging market, what you should do is a put trade, but not for 1 minute. You should do it for about 3 minutes, because it will definitely start coming down. And this in the middle of the trend, this is the kind of candle that might lead to a downward breakout. Now at the end of the trend, you get this kind of candlestick pattern. Now, this kind of candlestick pattern at the end of the trend will not be called a shooting star. No, it will be called an inverted hammer. Yes, it will be called an inverted hammer. And mind you, the color of this candle might be green. Even this one, it might be red. This now is called an inverted hammer candlestick. Now, this is a reversal pattern. This candlestick at the end of the trend will no longer serve as a continuation of the downtrend. It will serve as a reversal pattern. So you have to take note of this, because there is, you can imagine this candle is what led to the beginning. So let's say we have this candle and then we have the beginning. The beginning now becomes this one here. Now I want you to understand, when this candlestick is forming, there must have been some sort of buying pressure coming into the market to show that the downward trend is ending. Now this wick here no longer shows selling pressure. This wick here shows buying pressure. So the longer the wick, if this wick is really long like this, the better it is. So for instance, if I see a candlestick like this and I have a resistance level here, a support level, in the case of this downtrend, it should be a support level. If I have a support level down here, you see I have a support level down here, I have a wick, I will definitely just wait for the next candle to go below this support level, and I'll do a call trade. Why? Because I already know that this is the end of the downtrend, because I can see buyers coming in before now, and I can see this wick showing strong buying pressure. Mind you, this is no longer selling pressure. Now, why is this buying pressure? The buying pressure is not associated with the candlestick. It's associated with the market sentiment. The wicks is only revealing to us what the overall market is doing. So when you see a candlestick like this with a wick such as this, that is as long as this, what do you do? You look at the previous price action, and then maybe the previous price action, you must have seen a shooting star, a hammer. You must have seen something that has to do with reversal. Now this wick here is showing the extent of what you have seen. The longer the wick, the better. The same thing with this. If this wick is very long like this, it is showing strong buying pressure. Strong buying pressure. And this is showing strong selling pressure. In the middle of the trend, this is not showing buying pressure, because at the middle of the trend, you might even get something like a long leg doji where you have wick up and down. So it's showing you indecision, the level of indecision in the market. So this is how you trade this candlestick at different positions in the market. So what you need to know now is that the market gives its sentiment, and those sentiment is being reflected in the candlesticks. It is not the candlestick that predict the sentiment of the market. No, it is the market that gives the sentiment, and the candlestick interprets it the best way it can. So when we see what we use candlestick for is to confirm what we already know about the market. So if you already know that you are at the beginning of the trend, in the middle of the trend, if you already know you are at any position in the trend, then this candlestick confirms what you now know. You don't just see a candlestick like this at the end of the trend and then you do a put trade because it will go back up. You understand? Now, there are other parts to this, because there may be some other form of market pressure that may come into the market at the end of the trend that may lead to a breakout. So I will be talking about that when we're discussing breakout and how you can trade these patterns in a trending market. Remember, this is how you can trade this in a range bound market. When I mean range bound market, you have the 2 deviation here, you have the 2 deviation upper and the 2 deviation lower and the middle Bollinger Band. You have them at this specific place. So today I'm starting the course. Like I told you people, I'm starting a course, and in this course I'm pouring out everything I know about trading. Most of you must have seen my live trading and you're wondering, okay, how did he manage to do that? How did he the candle was going out of the money, but in the last second I won the trade. And sometimes you trade and you find out that the candlestick is going in the money, but in the last few seconds you lose this trade. You become frustrated, you become agitated, and all of these things. In this course, I am pouring that my heart, I am giving it my everything. That's why I'm taking one day for one topic. I'm doing this course for the whole month of February, and then I'll rest. So when I finish this course, I'm going to announce to you I'm going to announce to you the development and how we can get this course. So if you want this course beforehand, because I'm releasing this course, I know it's summer, but first of all, I'm giving it to just 10 students, 10 people, 10 traders. Why? Because like I said, when I release the course, I know I'll be getting some questions, and I don't want to rush anything. I want to give my time to everyone who is really ready to change their financial future. So I will be giving my time to these 10 people first of all, and then subsequently I'll be releasing it batch by batch to those who are interested in getting it. So if you need this course before time, you can pre-arrange for the course so that I can keep yours for you before it comes out. I promise you, in the whole of YouTube, you have never seen anything like this, because I'm analyzing the insiders in the market, I'm analyzing the price action, I am analyzing volume, I'm telling you the place of indicators and the place of candlesticks. Now, with this part of the market, I am going to form a system. I'm not trading in part. If you know me, where I don't really like trading strategies. I like to trade the whole system, and this course is what I want to do. When I explain each part of the system, at the end we are going to make this system this part a whole system. Each part will make it a whole system, and with that system we have our trading edge. You no longer have to depend on strategy, except you want to make fast money. If you really want to know how to trade, if you really want to understand this market like I have understood it, then you need a system, because it is system that gives you long-term wealth. This strategy can give you short-term profit and then you lose. It gives you short-term profit, you lose. And if you are not careful, you lose your mind. But a system keeps you, it gives you hope, it gives you a sense of security as a human being, that yes, I have a system of making money, and that system becomes part of your life. So this is what I have for the course, and for those who haven't gotten the ebook yet, you should do it to get that ebook so that you can understand the basics of trading. Get the ebook if you want to get them. Everything, if you want to ask me any question, you can get my contact, my WhatsApp address at the link in the description of this video. So our next topic will be how to trade these patterns in the range in the trending market. So until then, bye bye.